You know, I've been watching Chargepoint since that massive run up to $50 back at the end of 2020, and you guys have been asking me for years to give you a deep dive analysis on Chargepoint. Here we are in April of 2023, and it's dang near an all-time low, $9.19. So I think it's time that we can talk about Chargepoint, look at the financials really quick, and discuss, is it a buy, sell, or hold? And what do I think is going to happen next with this company? Let's get right into it. Hey guys, Tony DiNardo here. Welcome to the channel. I am mostly a value-based investor with a healthy dose of momentum trading, day trading, and some short squeeze plays. Let's talk about where Chargepoint falls into the mix. Remember back in 2020 when Chargepoint launched, it ran up to almost $50 based on excitement, hype, momentum, and now since that point, it has been on a steady decline, reaching a low recently of $8.07, currently trading at $9.19. Analysts have some higher price targets than that for Chargepoint. Are those realistic? What else do you need to worry about? That's what we're going to get into today. Chargepoint is a global EV charging company supporting the EV industry, charging your vehicles. They're targeting both personal vehicles, fleet vehicles, and residential charging. They're headquartered in Silicon Valley. The company's been around since 2007, and they have over 1,700 employees. Chargepoint's revenue is generated not only from the sale of their charging units, but the subscription service and the cloud service that they offer. Chargepoint offers a variety of different products, including both AC and DC charging, so that they can hit the broad mix of customer points in the commercial, fleet, and residential segments. And here we have a slide showing the line chart of US passenger EV sales and the projections going up into the future years laid over Chargepoint's commercial ports on the bar chart. And you can imagine that as those EV sales go up, Chargepoint is expecting that their installed ports are going to go up to match it. And that is really one of the most exciting things about considering a potential investment in Chargepoint, is thinking about that future growth of the EV industry, not only in the United States, but worldwide. Chargepoint is by far the largest charging network in the United States with over 30,000 charging stations compared to Tesla's 17,000 in the United States. And they do have a presence in Europe and other countries. Although now we know that Tesla is going to start opening up some of their charging stations to other vehicles. And that competition from Tesla and other charging station companies is something that we need to consider as we look at an investment into Chargepoint. Chargepoint locations are pretty easy to find if you're a EV driver, but they do have a free app that shows you where the closest location is, where the next one is on your route, and how much it is going to cost to charge your vehicle. We are going to get into the financial statements in a little more detail, but for some people, it's just easier to see in a picture. So here we have on the left-hand side, the revenue diversity. The blue part of the bar represents the charging systems, the actual units that they sell. The orange is the revenue generated from subscriptions, and then we have gray as other. And you can see that they have been making a nice trend upwards. Although I want to be clear, this is still a pre-profitability company. They have not made money yet. They are losing money every quarter. What they need to do is get into a profitable situation, and we're going to talk about that in just a couple minutes. Non-GAAP gross margins last quarter were 23%, on the rise over the last few quarters, and the non-GAAP operating expenses, they have been reducing that, which is what we want to see, 53% as of the last quarter. Now let's look at the 10K results. On the far right-hand two columns here, we're going to be looking at the 12 months ending January 31st, 2023 versus January 31st, 2022, you can see that there was a healthy increase in total revenue from $241 million to $468 million. After we take out the cost of that revenue for the year that just ended, that left them with $85.9 million versus $53 million for the prior year. They are a growing company still. So you can see here in the middle, the operating expenses, R&D, sales and marketing, general and administrative, cost them $427 million for the year that just ended. generating a loss of $341 million. And that contrasts to the prior year where they had a loss of $265 million for the year. On the balance sheet for the year that just ended, we have cash and cash equivalents, $264 million. Short-term investments, $104 million. Accounts receivable, $164 million, plus inventories and prepaid expenses, bringing our total current assets to $704 million. When we go down to current liabilities, we have a total current liabilities of $284 million. That is a healthy balance of current assets to current liabilities. On the long-term liabilities here, I want to point out to you the debt, $294 million. And when we look at total assets, we've got just over $1 billion versus total liabilities, $724 million. Subtract those total liabilities from the total assets. That gives us here at the bottom total stockholders' equity of $355 million. Although the company has been losing money since they began, so we have a accumulated deficit of just over $1.1 billion. Here on the statement of cash flows, let's skip right down to the very bottom of the left-hand column. Cash at the beginning of the period, $315 million. Cash at the end of the period, $294 million. We're going to break down these sections really quickly at a high level for you. We have a net cash used in operating activities, minus $267 million. Obviously, we don't want to see a minus in that section, but this is still what I would consider a startup company. They are in a growth phase, and I would expect them to be losing cash, but you need to be thinking about that as you're analyzing an investment in this company. Cash flows from investing activities, they had $18.5 million on purchases of property and equipment, $284 million purchasing short-term investments. They generated $180 million from maturities of investments, and at the end of the year, that brought us net cash used in investing activities minus $126 million. Most of that driven by this purchase of short-term investments. So not a big deal here. What I really want to focus your attention to, though, is the cash flows from financing activities. And the big ticket item here is this proceeds from issuance of debt, $293 million. And that is what we're going to wrap up this conversation on Chargepoint talking about. They did bring in a lot of money during the year by issuing some convertible debt. And you can compare this $293 million that they brought in from debt to what would have happened to the cash at the end of the period if they didn't have that. Cash at the end of the period, $294 million. Imagine that $293 million wasn't brought in. They would have ended the year with pretty much no cash. So now you know why they did that. For those of you who like a visual representation to get in my mind and look at how am I analyzing this company, how am I forming my opinion, we are looking for something that has all green squares on it. This is just a high-level back pocket analysis of a company. You can see one like Costco here where everything is green. With Chargepoint, we have 5 red squares and 2 yellows. Because of the existence of those red squares and the fact that this company is not generating positive revenue, this is still a speculative play. And I want you to have that in your mind as you're looking at Chargepoint. There were a lot of people pumping it in 2020 and even in 2021. And even though it's still at $9, you can see from the high level visual here that this is still a speculative play. There are plenty of things to like about Chargepoint. There is potential growth in this company, but right now it is still time to be cautious when we put our money into this stock. The existence of the red on this visual indicates to you that you have some potential for this stock still to go down, even though we're at $9. Let's look at a couple charts here to see how they have been progressing, and then I'll close out with the stock chart and tell you what I'm going to do with this stock. This chart shows a look back on their quarterly revenues. I see a nice upward trend here. This is what we are looking for. Gross profits, you can see the same thing. This is what we want, increasing gross profits. We do have a problem though on operating income being negative. As we talked about, this company is still growing. They need to get more installed charge points around the country, and the net income the same thing, negative and not really substantially improving. On the balance sheet, you can see that total current assets looks okay, but I want you to keep in mind that they had that injection of $293 million from those convertible bonds that they sold in 2022. And we can see that here when we look at long-term debt, there is that big jump in the long-term debt that injected cash into the company. The last chart that I'm going to throw up here for you is the decline in the retained earnings because the company continues to lose money every quarter. Obviously, this is not the ideal situation for a value investment. Is it a day trade, a momentum trade, or a long-term potential investment? Let's look at the stock chart one last time, and I want to finish up by giving you some details about that convertible debt. Those of us that are looking at investments in the EV sector, we understand that it is capital intensive. Many of these companies are startups and they're going to be losing money for the next couple years, and that is no different with Chargepoint. I don't expect them to have a positive quarter at the soonest until after 2025. Even with the growth, there's going to be a lot of expense that comes with that growth. The challenge is, how do you get there without being diluted to death, right? Chargepoint has about 350 million shares issued and outstanding right now. They have the ability to offer up to 1 billion shares. They have a decent cash position right now, about 14 months of cash based on their current burn rate. There are warrants out there, the convertible note that we talked about, this at the money facility for $450 million worth remaining on that. And we have the July 2022 shelf offering. You guys probably already know about that one. And as far as that convertible note for $300 million, well, hey, they needed the money, but look down in the bottom right-hand corner and let's look and see who is involved in that. Antara Capital, amongst other friends. So how am I going to trade Chargepoint? Well, knowing what I know about the EV industry and the trend for it to grow, I'm bullish overall on the industry, but I also know that this company is losing money, that they've got a $300 million convertible note that will be due in 2027. I'm not too worried about that right now. I'm more worried about how are they going to get through the next couple years. They've got a lot of ability to dilute shareholders. We can look at the chart here and see that there's a lot of good momentum opportunities on this chart. It trades with news and it trades with the economy. I think for my own trading style that I'm going to be looking for opportunities to pick up Chargepoint on weakness and trade out of it on good news cycles. I think that a good entry to start looking at Chargepoint would be when it retests that $8 level. If it goes down below $8, I would consider adding to my position unless the price is being driven down by news of dilution, in which case I would wait for that to work itself out. Keep in mind, as you're watching influencers on Reddit, Twitter, or YouTube, there are a lot of people that got stuck holding this stock far higher than $9. There are people holding it at $10, $20, $30, $40. You're going to hear very hype, optimistic viewpoints. I think there's no reason to be unbullish about Chargepoint, but I would say resist the hype. There could be some people pushing maybe an over-optimistic agenda, if you get my drift. I think it's perfectly fine to be patient with this stock, and I think that there will be opportunities to pick it up cheaper than the current price. Guys, thank you for watching. I hope you got value out of this. Hit that like button if you did. If you have questions about Chargepoint or any other company, let me know down in the comments. I love to hear from you guys in the comments, and I try to answer as many of them as I can, time permitting. Join me on a live stream during the day or during the evening. We do evening live streams here too. I am Tony Denaro. Don't forget to buy and hold that subscribe button, and I will see you on the next video.